You already feel that uncomfortable sensation that, despite saving money or investing, your purchasing power is decreasing. You are not alone. Every year, millions of people wake up to the reality that the money in their account or wallet is worth less than before. But why? Today, I will reveal one of the biggest silent villains that may be eroding the value of your wealth, something called the increase in the money supply. It is a concept many ignore, but it can be stealing your financial future without you noticing. If you want to discover how to protect yourself from this invisible threat and ensure your money does not lose value, stay with me. What I will share here can be a turning point in the way you think and act with your investments. Let us start with the basics, because understanding the root of the problem is essential to finding the solution. The money supply is, in simple terms, all the money circulating in the economy. This includes physical money like notes and coins, and also the money that central banks put into circulation through various mechanisms like issuing new currency and monetary policies. Imagine a balloon being inflated with air. The more air we put in, the bigger it gets. If we put too much air, the balloon can burst. When the government or central bank rapidly increases the money supply, or injects more money into the market, it can cause uncontrolled inflation, which is when the prices of goods and services rise too quickly. And how does this affect you? Because, in practice, the same amount of money you have buys fewer things. Your money loses purchasing power. The real value of what you have in your account decreases. This is not a distant theory, it's something that could be happening right now, especially in times of economic crisis, pandemics, or aggressive monetary policies. Let's bring this to your daily life. Have you noticed how the price of food at the supermarket, fuel, or even rent increases year after year? It's not just normal inflation. It's also because the money supply has increased and the money is worth less. You may even get a raise, but that increase usually doesn't keep pace with the rising prices. This creates an imbalance that takes away your comfort and security. And this happens silently, day after day. That's why understanding this concept is not just important, it's essential to protect yourself and your family. Maybe you already have an investment portfolio, maybe applications in fixed income, CDBs, or even savings accounts, or stocks. But what happens when the money supply grows rapidly? Traditional fixed income investments pay interest rates that may fall below the real inflation rate. This means that even with positive returns, your money could be losing purchasing power. And stocks, they might even rise, but often reflect the bubble effect caused by monetary expansion. In other words, stock prices may be artificially inflated, and when the money supply stabilizes, prices can drop sharply. That's why relying only on traditional investments can be risky. You need to understand how to identify assets that truly protect you. Now, let us get to what matters. How to shield yourself from the increase in the money supply. First tip, intelligent diversification. Don't put all your money into one type of investment. Spread it across assets that react differently to increases in the money supply. For example, invest in commodities like gold, silver, oil, and some agricultural products. These assets tend to increase in value when money loses worth. Real estate or real estate funds can be a good protection because property values tend to follow inflation in the medium and long term. There are government bonds that pay interest linked to official inflation. They adjust their returns according to price increases, protecting your capital. Buying strong foreign currencies like the dollar, euro, or Swiss franc can be a shield against the depreciation of your local currency, since these tend to appreciate or remain stable when the money supply grows. Investing in real assets such as land, farms, or even companies that produce essential goods is a way to keep your money tied to something concrete. If these tips have already made you think differently, imagine what learning more strategies and deep analysis can do for your wealth. So, subscribe to the channel now and hit the bell to get content that will always keep you ahead, helping you protect your money and invest more wisely. Here at Investor School, your financial success is our mission. Besides strategies, it is fundamental to adopt an alert investor mindset. This means following central bank signals, monetary policy decisions, economic news, and indicators pointing to changes in the money supply. The agility to act before most realize the problem can be the difference between protecting your wealth or suffering significant losses. Also, avoid falling for promises of easy gains and miracle investments that often overlook these important economic fundamentals. Want a real example? Think about countries that experienced hyperinflation like Venezuela or Zimbabwe. Their excessive growth of the money supply led to unprecedented crises, with prices changing hour by hour. In Brazil, periods of high inflation, like in the 1980s and early 1990s, clearly showed how protecting your wealth was essential to avoid losing everything. You don't need to go through this to learn, just understand the signs and act now. So, to recap, the increase in the money supply is a reality that can silently erode the value of your money. The best way to protect yourself is with knowledge, intelligent diversification, and an active mindset. Don't wait for the crisis to knock on your door to act. Prepare today to secure tomorrow. Your financial future depends on the choices you make now. If you liked this video, leave your like, Share it so more people learn to protect their money. And don't forget to subscribe so you don't miss the next essential tips from Investor School. See you in the next video, where we will continue to explore together the path to investing with safety, intelligence, and real results.